today the topic is basically a review of or the outlook of 2022, what we think are the big trends that are developing and will develop even further in 2022. And we're going to base it off a Substack that you sent to me earlier. I actually think it's a really good one. So why don't you go ahead and share it?
Yes. So we were talking before this episode about the possibilities of 2022, had our own ideas, and then I came across, thank you, Twitter, a Substack from a guy named Nikhil Basu Trivedi called Next Big Thing. Shout out to Nikhil. And his aggregation is awesome. Basically what he did was ask 50-ish kind of big picture thinkers, venture capitalists, investors, etc., about their ideas of topics, and he aggregated of the next big thing in 2022. And then he aggregated those into kind of chunks or similar answers, because a lot of people had similar things to say, right? A lot of people had thematic stuff that matched up with one another. But I think it's just a fun jumping off point. There's a bunch in there that you and I have fun opinions on. So I thought it'd be fun to go through a few of those. And of course, we'll share the link below on that Substack.
Cool. So let's start here. He has a ton of themes, right? But the first one that he talks about is Web3.
Yeah. This is I don't know if you saw this morning, the state of Web3 discourse at this moment. This morning, Jack, or no, maybe it was yesterday, Jack, the Twitter former CEO, tweeted a screenshot that he was blocked by Mark Andreessen. So Mark Andreessen and Jack have now stopped communicating on Twitter because Jack is hating on Web3. Jack's old school Bitcoiner, thinks that Web3 is a kind of a VC funded nightmare future. Whereas Mark Andreessen, ostensibly Andreessen Horowitz, highly invested in the Web3 thesis. So I don't have strong opinions on this, frankly. I think it's weird. I think it's funny. My favorite thing that I've read about it so far was, I think yesterday, Matt Levine said that this future, this Web3 future, it turns what was formerly kind of product managers or web developers into financial engineers. You used to be a software engineer, and now you have to be a financial engineer because you have to engineer all the financing and all the capital structure of any product that exists in Web3, which is really funny, right? Is that what we want? I don't know. I'm not really sure I have an opinion on that one.
Yeah, I mean, the problem is that the incentive structure for developers to work on your program needs to be aligned with the economics of whatever you're developing, and that requires financial engineering, because you need to actually optimize that for the community, for the developers, for everybody, right? You need to extract as much value for every stakeholder, so they remain happy. There's conflicting interests in the Discord group, and it becomes very hot and sensitive very quickly.
One of the responses on this was that the theme of 2022 is Web3 arguing. He's I'm long the hatred between between everyone and the arguments of Web3. I'm yes, that part I can get behind. That will not, I don't see that slowing down.
The next one is digital identity, and I don't have much to say here apart from my avatar is pretty cool.
You have a cool avatar on Twitter?
Or elsewhere? No, I have elsewhere. I keep it separate and private.
Okay.
Otherwise, people will figure out who I am.
Got it.
I'm nobody big.
I love that. Yeah, this one hasn't quite clicked for me. My wife made me update my Memoji to look more like me, and she was like, "Hey, it's time, buddy. You just got to update that." So it is hitting me in real life. I don't know. I grew up on the internet. I think having online identity is very important, and I'm generally along the idea. I can get behind the idea that will only accelerate, and that the management and curation and social elements of online identity will be an interesting. I don't know that 2022 is the year, but yeah, I can get behind that idea for sure.
Does this one look like me?
Yeah, that's pretty good.
There's the other theme that he talks about is B2B crypto. I'm conflicted about this one because like to me, one of the biggest use cases of crypto is like international money transfers. I do think it has some like, and it's super easy. Let's say you're in, I don't know, some place in Asia and you want to move to dollars, like send Bitcoin into one place or send Ethereum to one place to the other, and then
Better yet, stablecoins, man. Have you used stablecoins in
oh
your
yeah,
exploration
yeah,
of the crypto ecosystem?
yep.
Don't know how it plays out exactly in the B2B space, but I will say that I have a couple business owner clients who have balance sheets that they are trying to manage in their business, and they're always looking at their balance sheet and going, maybe I have too much cash in the business, right? It's more than I need for operating expenses. I don't have a great reinvestment opportunity. I don't want to invest inside the business right now. What can I do with this? You can get no yield in any business bank accounts, right? And if they know anything about crypto, they know that there are now promises of yield in dollar denominated stuff that you could ostensibly do on your balance sheet in your business. That's an interesting thing. If Apple carves off, even a tiny chunk and says, hey, we actually like the Luna ecosystem and we're going to go yield farm with a little bit of our balance sheet, that could definitely be interesting. I don't know if that counts as B2B crypto, but something to think about.
The big one that I want to talk about is the change in work. So it's essentially the culture around work, the expectation of being remote, and how everything has shifted from the pandemic. I think the big shift obviously happened, I guess, last year. That was a big change, but now it's been kind of companies have adapted to it. I think that's going to remain in place, and that will be likely a cultural change. You can actually hire so many more people. Your talent pool increases dramatically if you actually hire remote. So if you can make it work, then that's probably a really good benefit for a company. Now the big problem in my view is like how do you solve the issue of creating a culture, a company culture that's more or less like uniform, right? The expectations, the interactions. Not everybody's just there. A Zoom conversation is very transactional to me. How do you create that linkage between people? I think it's very hard for someone to when someone else has an issue, a problem, for many people to jump on and offer to help if they don't have relationships formed. And it's very hard to form relationships if you're remote.
I think traditionally that has been true, but as we get better at it, I'm bullish on our ability to figure that out, to navigate that, to get creative with our solutions, to get creative with our new work relationships and paradigms. I think this is an enormous theme. It also strikes a chord for me on historically, we've just divided work into you either have a full-time job or a part-time job or freelancing thing or somewhere in between. And there's so much flexibility in that. I really believe that people, as skill sets get more discoverable, if that makes sense, like somebody's skill set, somebody's working at Google and they have a skill set that they could use 10% of their working time to go work on something else. I think that type of flexibility and that type of interaction is going to become more common and more likely because we're just getting better at sorting the world and sorting people and sorting skills and experience and finding where people should be going. So I think I'm not sure where the origin of like, oh, you have one full-time job and that's what you do. I don't know where that came from. It makes me think of the 1950s and like, GE or GM and pensions, right? The company man. But I think that's going to slowly dissolve and work is going to completely transform. So I'm with you that this one is a huge trend.
The other thing that is changing a lot is that this is something somebody told me about the structure of a home. Like before this thing, most people didn't have a home office, but now it seems to me that anybody who's thinking about remote will want a separate section of the home to be a home office. And that's going to drive changes in the real estate configuration of like houses. My final comment is like, I think, if we look at even us two, I would say my relationship with you, I knew you from before, obviously, but we've spent hours now talking over the course of this year, and I feel like I've gotten to know you way more. And I don't think we needed to be at the same place. Remote could have worked fine. I just think it is feasible to actually start remote and develop individual relationships with people if you have ongoing meetings and you chat with them and you have some projects with them and stuff like that, and you just get stuff done. So like it can be done.
It's been fun. This was, and for the viewers, a little history. This was originally Gabe's idea to say, hey, we need to start making these videos. We got to commit to it. Got to get all this stuff done. I was like, man, I don't know what I'm doing, but I'll follow you into it. It's been a ton of fun. So yes, agreed. Yeah. And I do think more and more, both professional, productive, and real social friendship relationships are going to continue to be like formed, right? These new connections are going to be formed from this better organization of interests and data and skills and all that stuff.
So let's move on to the next one, change in investing. This is a big one. I think there's two things here. One is public and private investing. So changes in the public investing, what we saw in 2021 was the rise of the retail investor. What are your thoughts on that?
You and I have like slightly different views on this, but public markets, I believe in kind of the old school model of how they work, that they're kind of popularity in the short run and voting in the long run. And I think this year was pretty brutal on stock pickers. Would you agree? And a lot better for the index. So like in 2020, I saw a ton of people I met with a ton of people who said, hey, in my Robinhood account, I deposited 10 grand. It's now at 80 grand because I picked all these genius stocks. Like, okay, good job. Thank you. 2021, not the case at all. You would have been so much better. Totally inverse. You would have been so much better owning the index, any index, correct, compared to most of the meme stocks or the popular stocks that, Robinhood actually does suggest these, right? They have algorithms for what shows up first. But yeah, I still believe in the power of public markets to just pay you a risk premium to participate and own them. The private market thing I think is really interesting as well, but I know you have some thoughts on both sides.
Yeah, I would say on the public markets, yeah, you're totally right. Everybody was a stock market picker genius in 2020, and in 2021, they came to the realization that it's actually hard. That's not easy to do this. I do think, though, that index investors are going to continue to outperform unless you actually have some sort of strategy behind that has worked, that there is some scientific evidence that it might work and will work, right? So, if value investing has tend to work over the long period, but for the last like 5 years it didn't. But statistical calculations or averages sometimes do change over time, so it remains to be seen. It is, though, way less work to just invest in an index, and so sometimes if you include the amount of time that someone would spend doing research and stuff, maybe it's not worth it.
What do you think about the new paradigm? So like consider 2 years ago and then consider today, the median American who has a little bit of cash to invest and the way that they're thinking about deploying that money. What do you think about the change in that conversation about what's possible, where that money can go, where they might invest, and where people are excited about or where people are actually deploying money?
You talk to people 20, 25 years ago, mutual funds and stocks and bonds were the case, right? Then suddenly you had ETFs, you had way more ETFs. Optionality for ETFs has grown tremendously. Global ETFs, right? Like things that actually you can invest in local stock markets, but in the US through the indexes. The choice that's available. It was like going from like a small little market on the street to going to like a giant Walmart. Like choices are
super
infinite.
Walmart. What's the big one's called?
I don't know.
Yeah, there's Walmart's and
Sam's
there's
Club. No.
Sam's Club, Costco. Yeah, that's it. But I think it might be called a super Walmart, like the biggest Walmarts. But yeah, point is the same.
But I think like Costco is more like Vanguard in terms of like it reduces your choice, but it gives you good choices, like good value, right? So that's the option. And now you have the rise of like crypto, which gives you better. I think for me, the big eye opening of crypto, like this whole decentralized finance, is that you can get better yield on your dollars. So if you're looking for fixed income, there's a likely chance that your savings, if you have like a savings account, that will be actually replaced by, some USDC or some random exchange that you get more dollars. Like it's just insane that for a certain period of time you could go actually yield hunting and get like maybe 15%. You just have to be actively yield hunting all the time and moving the money around, and you're still getting that percentage. And it compounds daily, right? Like or seconds. Like I don't know what it is. Like you can see the numbers going up by like each second.
You can. Yeah, I have a question for you on that one. So we know that that's just a whole new category that has just been enabled, and a lot of people are still, as a lot of professionals in our seat are absolutely like, hell no, won't touch this. Either oblivious or just like, no, it's all a scam. I'm shutting my eyes to it. That's one approach for sure. I think like real estate, and I also think private investing. Like I think the fact that you can invest whatever $500 on AngelList is another just like monster change.
So I didn't want to start. That's my like. If we're gonna go for private now, I'm happy to talk about that. Like,
yes,
we shut down the public. Okay, private things, eye opening. There's and I'm gonna call them out here. There's a group called RUV Alliance. So it stands for Roll Up Ventures Alliance, which is essentially a kind of grassroots syndicate of people like joining forces to invest in startups. That in combination with like AngelList that has been providing like a very inexpensive way to raise capital. If you combine both of them together, you've come to the realization that you have a whole new category of people that is going to compete for these good investments against the traditional angels in the market. I think we're at the beginning of what I think is going to be even higher valuations than before in the early to seed investments. It used to be one of the places where like an angel investor could get an outsized return, and I think those returns are going to come down dramatically in the next couple of years. That's my view, because I don't think you're going to have so many more opportunities to invest. I just think the amount of capital that's flowing into those kind of deals is just increasing dramatically.
Yeah, I don't think deal supply, like I don't think new formation of companies that have great founders and great markets is like growing nearly as fast as the accessibility of the markets of new entrants, right? And new capital to come in quick and be price insensitive as well. So I'm definitely amenable to the view that like it's likely to see some compressed returns to the median or the average angel investor. I can definitely get behind that.
But shout out to the people working very hard at RUV Alliance to making this possible. It's been like, I'm part of that Discord group. It is fascinating to watch what they're able to do.
It is. It's fast social coordination in ways that it's so antithetical to the way things normally get done in traditional finance. It's pretty cool. Last question on this thing. Imagine you're a billionaire and you're allocating for your new billionaire family office, right? You're newly minted and you've got $1 billion of cash because you sold whatever. And you want some fixed income exposure because you want to take less risk. How much in dollars or in percentage of the whole portfolio are you willing to deploy into crypto, like dollar-based crypto stuff, stablecoin, yield stuff? In all its formats, right? There's the centralized formats, there's decentralized ones, there's everything in between. Are you comfortable? Like 10% of that is $100 million, right? 10% is a big allocation, but like for fixed income, like not really. That's, 100 million in the traditional fixed income markets is no big deal at all. What do you think about that? How does that make you feel to maybe deploy huge sums into stablecoins? Well,
there's a website called DeFi Pulse that kind of shows the total value locked in DeFi. Yeah, it peaked I think in November at like 110, a little bit over 110 billion. I mean, I would definitely not want to be anywhere close to that number, but like if I had $100 billion, like probably that would be fine. Right now it's at $100 billion locked into DeFi. I don't know. It's a good question, but I think if you're smart about it, if you have a team, if you have people helping you out, you could definitely put money to work in in DeFi here.
Even knowing what I know and having played in crypto whatever, since 2015 or something, that'd be really hard. It'd be really hard for me to put even $10 million. That's 1%.
No,
Right,
but
of a
you would have
billion.
to partner with maybe, a big, you
Yeah,
would partner
with
you would,
an operational partner for sure
yeah,
to get
yeah.
it done. And there's people doing that, no doubt about it. But
But
yeah,
there's
even
people
the idea of doing
providing liquidity in exchange for a good amount of tokens or whatever you want to call it.
right, but each layer in the DeFi ecosystem requires a leap of faith that's just different than the leaps of faith in traditional finance. Having a bank protect your $10 million or $100 million, investing in a bond that has a fixed maturity and is backed up by the assets and the contracts of a company, that's one thing. The DeFi stuff, man, you've got to trust the stablecoin itself. Hard problem. You've got to look into the algorithms that are generating this yield. What happens if everyone leaves except for you? There's just a bunch. So an interesting I don't have an answer either, but I don't think the answer is $100 million, even though I know the yield on that would be ostensibly terrific compared to what you can get in traditional fixed income. It still makes my stomach queasy to think about putting that much to work in.
But there is, yeah. I guess things will change though over time. I mean, you could definitely give a call to Coinbase and see how they can help you, right?
Of course, of course. There's experts to help you. I'm agree on that point for sure. But I think once you get down to brass tacks of where is this going? What is this backed up by? You have to trust someone's treasury. You have to keep an eye on. You have to have someone who really understands the protocols you're invested in. If Solana goes down for a day, like it did a few Saturdays ago, right? What does this mean, right? There's a lot of layers.
Let's move on to the next thing. So part of it is the dislocation between public and private markets. We've seen a ton of money moving into the private markets. Valuations are outrageously they're insane. I've seen things that are equivalent to the EV over revenue. So basically the multiple of enterprise value over revenue, similar to price over sales of 100x. Sure, you could argue that Rivian has that kind of same multiple, but it's not the same when you have sophisticated investors paying that amount.
Agreed.
So something is off there. There will be probably a correction in that area. I just don't know when or how or in what way, but we'll see.
Not an expert, but I do trust the markets to figure themselves out. These transactions have gotten faster, better technologies helping them. I am generally pro private market expansion and access to private markets in all the fancy ways that we're doing it.
Yeah, for sure. Same here. The next thing is the topic of the previously overlooked. So it's mostly overlooked consumers. Any thoughts on that area?
Yeah, I love this one. This basically means think of the revolutions that have already happened with onboarding a bunch of people to the internet and online banking and
credit cards
and a ton of stuff is happening both domestically and globally. There's a huge population that has been just left behind on this as we've gotten everyone an Uber account and a credit card and a Coinbase account. I don't know, whatever else. This theme is there's going to be a ton of progress made and money made in getting the previously overlooked online and on board with this revolution. I'm totally behind this. My favorite place here, if anyone if you use a password manager and you know how to do it, you probably understand how important they are to managing, going back to online identity. If you've ever tried to onboard someone, I onboarded both of my parents to LastPass because that's the one I used and I knew I could teach them how to do it. That's one of a million examples of more and more of the population is going to have to manage life online. And there's going to be worse and worse consequences for not being able to do it. So I'm super bullish on this. Everyone on earth literally getting onboarded to these various fancy online services and features that we all that if you're watching this video, you probably already know about.
I actually look at the credit cards one because I just saw this like happen this, as I say, in 2021. It's like the buy now, pay later trend. Like most people say like, oh, you don't need really the buy now, pay later trend if you have a credit card, but a lot of people don't have credit cards. And so they would just find this as a useful way of managing their payments or buying something at a lower cost. Like a lower cost is like a lower initial outlay of cash. The cost is the same or more. So, but
quicker, easier onboarding, maybe.
Yeah,
don't have to wait for a credit card in the mail.
I think like the companies say that it increases their revenue, so they're all for it, right? Because it makes something much more feasible. Instead of paying like $300 now, you're paying $100 for 3 weeks every week.
Yep, so we'll get the bankers to securitize this, and everything will be great.
Actually, there was a comment out there that the FICO scores of like these lend, like the people who are being lent money is much lower than what the credit cards are used to offering, right? And so, the credit cards will still be the prime kind of customers, and then you'll have these guys as subprime, where it's like these companies, and the question is like, who's going to be the bag holder?
I think it's a BNPL providers based on not a lot of research, only having read a Grant's Interest Rate Observer article about BNPL having like, according to their calculations, something like 0.9 to 1.6% gross profit margin all in. So I'm not bullish on
those. Oh, really?
Personally.
Yeah.
I just haven't done the work, just convinced by someone else's work.
Yeah. I do think we're going to see a lot of like loss rate for those loans. In like if you already have a big loss rate right now in the best credit environment ever, what is it going to look like when we hit a recession? So we'll see. I'm not sure what this is going to look like, and it's probably not a theme for 2022, but it will be a theme for like later on when we have slower growth / recession.
Agreed.
So the next topic is decarbonization. And we talked about this offline a little bit of like how the desire of everybody is to decarbonize, but you hit a wall when you have conflicting desires, right? Like you have the desire to live in a bigger home. Well, that's unfortunately going to have a larger carbon footprint. You have the desire to travel to get to know different cultures and visit the world. Well, flying is pretty carbon intensive. So the big question is like, how do you merge those two? How do you account for both of them?
When big populations of people experience a step up from the lowest levels of poverty to, getting over that like $1 a day living standard, their intake of protein increases enormously. We know that that's super carbon intensive. So yeah, I'm with you on that one. I think this trend will continue. Investors, and it's driven by both governments and investors demanding more out of their investments. I'm bullish on the creative approaches to it. If you didn't follow the story of Engine Number One LLC, the very tiny activist fund that I think got a board seat at Exxon, is that correct? Something like that.
Oh, I don't know.
Good story from this year. That's kind of a governance, corporate governance story. Yeah, definitely bullish on the continued, run towards decarbonization. But yeah, it's got plenty of headwinds that are really tough demographics wise.
I think, if you want to make progress in this issue, you need to have a framework for a carbon tax that accounts for both, domestic production, international production, similar to like a VAT tax, right? Where, instead of having value added tax, it's, carbon added tax. I'm framing it. It's called the CAT.
CAT. There you go.
The next part that we want to talk about is digitizing the supply chain. Yeah, have you heard of the company, the startup called Flexport?
Only because of the CEO in the port of Long Beach driving through and becoming.
Oh, the Twitter thread, right?
Yeah,
that you probably saw.
Yeah, exactly.
Okay, so Flexport is essentially a logistics company that deals with mainly ocean freight, air freight, and I think now trucking also, and less than container. And so what they've done is they digitized the entire process of putting cargo, of freight. So back, I would say even like a couple of years ago, freight was done in pen and paper. Like it was done via paper and like emails and not very coordinated. There wasn't a digital product that could allow for, for better customer experience, better all the things that digitization provides. And so I think this is a big trend that you're starting to see now that like some of these companies are like Flexport are beginning to scale and become well known. So it's pushing the industry forward, pushing the industry towards, again, better supply chain management through, digital means. And so with this crisis, kind of like in the supply chain, you're just going to see more of that. I just think it's been brought to our attention, but it's been happening a couple of years ago. And with that, we'll just let's touch upon inflation. Like I don't know about you, but I've felt this year has been the year that I felt most about inflation. Like the housing inflation, the prices are astronomically higher than what they were in 2 years ago, pre-COVID. I think that has to do with demographics as well, but and money printing maybe. There's some conflicting there thoughts on money printing, but I do think also the supply chain, lumber is like at all-time highs.
If I have any notes on this, any value to add, if you haven't studied really smart people talking about inflation, arguing in either direction, inflation is much more nuanced than you may think if you've only heard of it a few times and thought price go up, that's inflation, that's bad. There's a lot to it. I think of it kind of as a bizarre phenomenon. It's both monetary and social and psychological. There's a bunch that goes into it. It is like inflation and interest rates are the two like most key prices in finance. So, yep, crucially important. Do I understand it or exactly where it's going? Definitely not. From a high level, if you need to like think about your balance sheet and what you own, like how do you protect from inflation? Own productive assets ostensibly is probably the way to do that. So think about doing that if you haven't done it.
The war for talent, both inside and outside the US.
Yeah, we touched on this with the future of work thing a little bit. Totally agree. The war for talent is insane. The need for people who can build great stuff has never been higher. I actually don't know that for a fact. That's anecdotal. But yeah, an offer for someone who's already got a great job to move somewhere else, like the amount of boxes you have to check to really get someone to make a change from working at, Facebook, you really have to do quite a lot to raise the floor, right? The floor for talent is just raising and raising and raising. And Lord knows how high the ceiling is. But I think the floor of what you have to do to hire smart and talented people is very high and only rising.
Yeah. And then the last one is, I think the last one I want to touch upon is fintech.
Yeah.
Because this is our industry essentially. So any thoughts there? There's so much to talk. We've talked about buy now, pay later. We've talked about like onboarding of the overlooked consumer. Is there anything else that?
Yeah, I'll make a prediction. I made a prediction last year and I think it worked, right? Elon Musk tweeted or added Bitcoin to the Tesla balance sheet. I said that on his channel last year. I'm going Stripe IPO, like story of the year, like huge IPO story of the year. I think Stripe IPOs in 2022. Stripe is the fintech company that if you haven't heard of, they're incredibly preposterously important to the economics of the internet. I've learned more from like Stripe employee blogs and Stripe's blogs about how payments work than like from any other company. Fintech generally, I don't know. There's a little bit of me that's a little bit like less bullish on this because I feel that we're already accelerating toward this insanely financialized future. So I don't like fintech's not the most interesting thing in the world to me. We pay people. We're going to keep paying people for value. We're going to find new ways and creative ways to do that. That's all great. But I don't know. I can't see that far into the future and envision like how fintech changes that much. But there's a ton of, I mean, I don't know, and investments into fintech and investments into changing people's experience with their money in our industry and like adjacent to our industry is enormous, and the pace of change is enormous. And you and I have to be very good software operators in order to run our businesses. It's just a fact of it. So
Yeah. Do you think so? There's a couple of thoughts that I have here. It's one is just in general, Stripe. Yeah, they are between Stripe and Shopify. I think they are coming together and truly allowing commerce to be global. I think that's something that's really really important here. Like they're really engaged in converting their Shopify customers in global retailers. That's something that we've never seen, and it allows for scale at an unprecedented speed. So that's kind of like number one for me. Yes, I will take. I think Stripe is probably a 2023 IPO, but so I'll take the over on that one.
okay, fair.
The other one that I think is coming at some point is the rise of digital only banking. Um, we do have a couple of like digital only banks, I think, or like
Dave and
apps.
Chime.
I think the growth of those will become much bigger. Basically, they're essentially an app, and I don't understand why like the existing apps don't provide that. So who knows?
Yeah, the thing that I've seen there is that for the huge number of Americans living paycheck to paycheck, the value add of Dave is that it like uses AI or something to lend you money to at zero or very low fees and interest rates to get you to your next paycheck, which I don't know. It's 0% loans compared to payday loans. Like I drove by on Friday, I went to go pick up dinner and I drove by a payday lending place that I noticed at 6:30 p.m. had a line out the door. I'm like, it just like caught my mind and was like, yeah, there's still a long way to go on that. I think everyone in that line, well, I don't know about everyone, but I wish I could hand them a pamphlet and say, hey, there's probably a cheaper way to get this done than, these check cashing services or whatever.
The other part is the payroll. There has to be a better solution to payroll.
There's a great essay that it's been a long time, so I'm going to misquote parts of it, but it's called something like The Promise of Payroll APIs. It's an Andreessen Horowitz essay about how useful ongoing payroll API data could be to all these different services that interact with people from a credit perspective, from a financial planning perspective, from a million different reasons, but they haven't been delivered, right? Like, I don't think that, what's the biggest payroll provider? ADP. ADP processes, ADP and Paychex process whatever 50% of payroll in the US or whatever.
Yeah.
And they don't have, like, we can't API query that data on behalf of anyone. So if you haven't looked at your pay stubs in 2021 to check, that's like where the rubber meets the road, right? Pay stubs and W-2s is where, and bank statements, of course, is where the action really, really happens. So ton of excellent data there, underutilized. Payroll can and should get so much better.
I think it's going to be the rise of Apple as the primary interface between the consumer and the payment processing industry. Apple and Google, because of their phone, everybody's using their phone to pay. It's growing. If you look at the statistics, it's growing very quickly. So they'll be the interface between you and whatever the payment infrastructure behind, and that's basically a privileged spot to be in.
Oh yeah,
and that is going to create a lot of friction between players. It's gonna be, I think, like there's a lot of competition now, but I think that competition is going to go away, and we're going to have. I think that is one of the main issues why you have seen Apple's multiple rise. I think people don't realize that, but it is coming. The Apple, you know, Apple is going to take a stronger and stronger position as the customer, the front facing customer app, a payment app.
Makes sense and fits in neatly with what we talked about earlier about digital identities. The single sign-on between a bunch of apps use Google or Facebook or Apple as your identity to interact with the application. It makes total sense that would be. And the emoji you just texted me earlier in this conversation, that's an Apple piece, right? Digital identity. Who's going to be the kind of the keeper of that? It's a really interesting question.
I mean, secretly, I don't know if you know this, but you actually send money from people to people using Apple Pay.
I have done it. I have one friend who's insistent on using it over Venmo, which I'm like, okay, sure, it's the same, just
no,
software, but okay.
I know, but it's literally coming. Like it's going to take share, and so there is a concern that the Venmo and the Cash App, which are practically the biggest two apps, will actually have more competitors. Google Pay had an issue some time ago where like the entire Google Pay US team went in disarray when the leadership kind of like abandoned their posts. They went to another. I think they resigned and like they went to another company, and it's been an issue ever since.
Interesting.
Yeah.
Interesting.
So we'll see what happens, but I think fintech is huge industry. Like the scale is huge also.